We start today's market talk. Embrace an uncomfortable know nothing mindset. And this is what the best guys are telling. I haven't the faintest idea as to whether stocks will be higher or lower a month or a year from now. And Benjamin Graham said the determination of the future prospects of an enterprise has received little space because little of definite value can be said on the subject. It is very uncomfortable to say, I don't know. Some very smart people have flaunted their ignorance. The most important factor is focus, also consistently trying not to be stupid. An investor or trader who can outperform by 2 to 3% per year over 2 to 3 decades will end up in Hall of Fame. Hence, just follow, don't predict anything. Okay, the key issues which will determine movement of equities. First is how the Chinese economic prospects fare in the medium term. Mood in the market has turned a bit somber. One of the reasons is China's stimulus, but China's market shed their recent gains after the stimulus measures failed to meet expectations, leading to fall in commodities and indices. Shanghai index surged 36% in 3 weeks. Similarly, Hang Seng rose 37% in the same period. So this extreme rise is now getting corrected also. So they have corrected 10-11% already, and now the latest measures which were announced on yesterday, that is Saturday, have not really enthused the market. The other issue is impact of two ongoing wars. How fragmented the world gets due to two ongoing wars will influence India's prospects. Worst case scenario will lead to rise in crude prices, disruption of global trade and financial markets. US Fed's approach towards policy rates, what US Fed will do and what that means to flows is very important. Now, very interesting was the management commentary of TCS. TCS results showed there is revival in BFSI, pickup in technology and services, energy and utility remain strong. Lowering of rates, what they said was lowering of rates could lead to confidence in consumers and industry. And they are hoping that a good holiday season, which is likely to come up now in the US, can bring back technology spending in retail and discretionary spending. Now, the other issue is whether RBI will cut rates in December or hold until February. RBI didn't cut rates but signaled a shift in MPC stance to neutral. What analysts believe is that rate cut cycle will be a shallow one because India didn't raise rates as much as the US, starting from December or February, depending on data and how the food prices and global commodity prices behave. Now this is the big question, whether the new domestic investors will remain invested through the inevitable lows. Historical evidence suggests that periods of rate cuts tend to be initially accompanied by corrections in stock markets. One reason is lag in transmission of rate changes. If domestic investors can hang on to equities, FI's outflow pressure will not be that much on our indices, and it will not dent the Indian equities that much. But the domestic buying has to be continued. Earnings season has begun, and what company chief executives expect in the second half of this year in terms of growth is very important. Now, their management commentary will be very critical. Now, if you see two big results, as I have seen, TCS was pretty bad. Even DMart, it is below expectation. So one has to be careful. And insipid earning season would be a worrying sign for investors because first half of FY25 is a washout in terms of earning. Then full year consensus earning growth of 13% on which the valuations are pricing in will require a sharp turnaround in fortunes in the second half. Now, PMI data has been pointing to deceleration in both industry and services. TCS results were below expectations on revenue and margins, but commentary was positive on demand front. if investors think that okay, let us first see earnings growth, and then we will put our money, then equities expected may move into a time correction. Now coming to weekly data, Nifty and Nifty Bank were slightly negative, Nifty Bank slightly more. Gold was stable, silver corrected a bit. Crude oil again at similar level, not much of impact right now. Natural gas corrected because it had gone up also too much. Uh, Dollar was slightly stronger. USD INR has now breached 84 because of FI selling. India's 10-year bond yields corrected a bit. NSE market cap also rose a bit, so that means the broader markets were performing. Market-wide position limits increased now because obviously the expiry is progressing, so or the contract is progressing, so the positions will be built up. Dow Jones, Nasdaq, S&P 500 all had a positive 1% plus week. Now coming to US indices posted a 5-week winning streak on Friday. Dow is already approaching 43,000 milestone. Despite all the problems, that is Middle East, higher CPI, lowering of rate cut expectations, etc., markets moved up due to good results of big banks. Now, if you see, because of all this uncertainty, 10-year yield went up. So it crossed that 4% mark. It had gone below that because the expectations of another 55 point rate cut has reduced. So now it is now reaching that level of 20 EMA. So we'll have to see 20 and 50 EMA. So we'll have to see how it goes from here. Dollar index also bounced back because other currencies were weakening with respect to dollar. So now it has bounced back very nicely and reaching that 102 plus level. Brent crude also rose, but still it is below that declining trend line. So after around 80 odd, selling came and it came down. Gold didn't rise much, so it was stable, but still it is in an uptrend. So it has not sold off. So now as the thing progresses and if there is uncertainty, then it becomes a safe haven. Copper also, after 2 weeks of rise, didn't rise. It corrected a bit. But again, this was because there was negativity around China. Now, Nasdaq had a positive week, was up 1.18%. So the US markets were strong and there was buying here. Similarly with Dow is now approaching 43,000 and it's on a constant uptrend and the trend has got extended higher. So trajectory is higher or the gradient is higher now. Now coming to India VIX corrected a bit and has come down to 13.22 levels. So it has it rise, but now it is correcting. Government bond yields also came down. They had risen last week, but now with this RBI policy and all, it came down. So it is in a lower trajectory. Nifty 50, if you see here, it was a troubled week. Though if you see the channel is strong, it is in a higher high, higher low channel. It is correcting and it may come to the lower level of this channel, but still it is strong. We made a kind of a small bearish candle this week, but that level of 24,700 was protected. Let's see the daily chart. So if you see here, we fell on 4 out of 5 days last week, and the Monday's fall was big, but that 24,700 was protected, and it is between that 50 and 100 EMA. It is not able to cross that 50 EMA level, and at higher levels it is getting sold, and the support till now is at 24,700 level. So if this level holds, then it is good. Otherwise, we will come down to this 24,000, 23,900 level, which is the next support. Now, if you see here, if there is a dip here, then we will form a head and shoulder pattern, so which indicate a lower level from here. So let's see if this level is formed or not formed. This is the hourly chart of the Nifty. So if you see on 7th, after the fall, it became oversold and then it rose. And after that, it has been mostly sideways throughout the week on every day. So there is not much of activity in terms of positions also. Nifty Bank, similar chart, higher high, higher low. So again, it had the same issue, big decline on Monday, which impacted the full week. So this was the decline on Monday. After that, it has tried to go above, but then has fallen and is testing that 100 EMA at 51,000. So this becomes slightly a critical level to see. It has formed a bearish hammer. So if you see, this is a bearish hammer on weekly charts, which indicates that decline was controlled and the bulls could take it above. That's why the hammer is formed. So probably this should slightly recover next week. Now, among the weaker lot is the Nifty PSE index. This is a weekly chart. So if you see, it has corrected and has come down, and now it has come down to a critical support. So that is one place where there is some issues. Other is HDFC Bank. It is not able to give a decisive direction. So on a daily chart, it is below the 50 EMA and it is now stuck in this 50-100 EMA range. So if it has to go up, it has to cross this 1680 level. Otherwise, it will go and check this or test the 1600 level. Now Reliance, if you see, I had brought out two supports for Reliance. Now it tested the first support last week, and this week it tested the second support. So at 2720 level. So it is nearly now oversold. So there it is becoming attractive now. Only thing is that results will have to be seen, and in my opinion, if the results are not even negative, they are just normal results and nothing great about them, still they would be short covering here and it will bounce back. It is falling because FIs are selling both all the big stocks. Now the good stock last week was Trent. After its inclusion in the Nifty, it was up nearly 12% last week and has now gone to 8,200 level, and it has had a beautiful chart. So if you see, from last year onwards, it was at around 1,000 level and now it has reached 8,000. So this trajectory goes on. The Nifty Metal Index was a better performer last week, but then it has corrected. So it corrected on Monday after it came out that probably the Chinese stimulus is kind of damn squib. But then on Friday there was talk about something more on stimulus, etc. So it rose a bit. But I think it will correct back because till the time there is no clarity on this issue, it will just keep fluctuating here. Midcap index was positive last week, so there was some broader level buying. It was up 1.26%, and till the time it is above this high of 4th June, 5th June, that election day high, it is okay. And it didn't correct much, and it rose back from the lower level, so which is decent. Similarly with the small cap index, again it made a green candle, 1.33%. So with broader level buying, and if the results are good, then we should see better levels. Now I'll cover 3 stocks. First, I just wanted to also tell that, what is the impact of what FIs are doing. What they are doing is they are doing long liquidation. So they have reduced their longs from roughly 80% to now 30%, and they are doing profit taking. Now, what happens when there is long liquidation? There is determined selling throughout the day, and there is no intraday rally. When somebody does profit booking, there are intraday rallies takes place. But now you're seeing a constant fall which took place in the last week or so and last 2 weeks. So we have already seen 5 to 6% correction from the top, indicates, as I have shown you, that it's 5 to 6% only. So if you see on a longer time frame, the uptrend is still intact. Now coming to Tata Power, it is the India's largest vertically integrated power company with a strong presence across generation, renewables, transmission, distribution, and advanced energy solutions, with an installed capacity of 14,707 megawatt in FY24, a 20% increase from FY24. Company has diversified energy mix, including 8860 megawatt of thermal, 3490 megawatt of solar, 1034 megawatt of wind, and 880 megawatt of hydropower, and 443 megawatt of WHRS. WHRS is waste heat recovery system. It will benefit from Government of India's favorable green policies. They are also pivoting. This company is pivoting now, and I think now already 40% of their capacity is renewable, and they are trying to increase it more from there. They are going to get benefited from the Government of India's green policies, renewable energy installation target of 500 gigawatt by 2030, PM Surya Ghar and solar PLI incentives, strong transmission and distribution. Conventional generation is also chugging along. Transmission and distribution business with a capacity of 6,668 circuit kilometer and 1.25 crore customers is also strong. A renewable energy capacity to double to 10 gigawatt in the next 2 years. It's the largest player in the rooftop solar segment with 13% market share. 4.9 gigawatt of solar module manufacturing capacity, and it is also a leading player in engineering, procurement and construction, and operation and maintenance solutions for both utility scale projects and consumer and industrial space, and residential rooftop solar projects. EV charging network with over 5,500 charge points across India. It has entered into an MOU with Maharashtra government for 2 PSPs. PSPs is pumped storage projects with a combined capacity of 2.8 gigawatt. Now these guys are also realizing that doing all these hydropower projects in Himalayas and all is very risky because it causes a lot of landslides and other things. It is easier to do it in other places. So what is done in a pump storage project is, at the time when there is energy is surplus throughout the day, you pump water from a lower reservoir to a higher reservoir, because at that time maybe renewable energy is available and there is energy surplus. Now when you require power, at that time you get the water down and produce electricity. So this is the basic thought process behind a pump storage project. So now coming to their P&L, this is in billions of rupees. So they are expected to do around 65,000, 74,000 and 80,000 crore in the next 3 years. EBITDA is also improving. They had a target of doubling their EBITDA from FY23 to FY27, which is most likely, which is going to double now. That means from 7,700 crores, it will become 16,700 crores. Profit is also improving, and it will grow to roughly around 6,000 crore over the next 2-3 years. It is for FY26, they're talking about an EPS of around 14.7. And now if you come to the margins are constantly improving. EBITDA margins, other margins, ROE is improving. And if you see, the revenue growth is decent, around 10%. EBITDA growth is, if you see a CAGR, around 15-20%. And EPS growth is also decent. Now they're talking about their renewable generation capacity, wind and solar combined. So they are gradually increasing it, and if you see over the last few years, it is going up. So by FY27, it is expected to reach around 7.8 gigawatt or 7786 megawatt. And net renewable energy generation is also increasing. So BU is billion units. So they are going to come out with roughly around 20 billion units of renewable energy. As I have discussed, they are big time into EV charging, and they are taking up projects for the various states. So bus charging network, highest number of installations done in a quarter, 13 crore green kilometers milestone, and 1450 plus charging points energized with green power in Maharashtra. Now, this is one of the brokers which has done their valuations, keeping in mind both their regulated, that is the conventional power business, and other businesses, renewable storage, power trading, etc. So they have come to a equity value of roughly around 560 for FY26 earnings. So, but this is at a discount, like if you say uh, Premier Energies, etc., which are also into the same renewable business and making solar cells, etc. They are trading at nearly 100 times EV EBITDA. So these guys are still at lower level, 16 times, and also there's a scope for going up also. Since it's a large project, it doesn't move that much. They are also doing a hydro project in Bhutan. They're getting a lot of transmission and discom orders. It can also capitalize on the renewable energy needs of group companies. So that means Tata Steel, Tata Chemicals, TCS. Also, if they require renewable energy, then they can come back to Tata Power. Now, in transmission and distribution, they have cut down the technical and commercial losses, AT&C losses in Odisha distribution circles. They have reduced, and they are doing this distribution in number of states. Now, coming to comparative valuations, they are at lower valuations, whether you see EV EBITDA or PE, as compared to Tata Power and Torrent Power, which is their immediate peers, which is generally Torrent Power and JSW Energy, which are their immediate peers, because NTPC is a different ball game, it's too big and all that, and the others. So it is not very expensive as on date, if you see. Now coming to their chart, it's a upward trending chart. But the gradient is not very steep. It is gradually going up. So right now it is at a reasonable level. So any fall is a buying opportunity closer to 450. The risk reward is less, and the business growth momentum is good, and you can't lose money in a good business. Now, next talk I'll talk about is Skipper. In this, I will cover this NEP also, National Electricity Policy also. Skipper is one of the leading transmission and distribution players with its focus on structures and distribution poles. So what happens is, when we are talking about power, we only see NTPC, Power Grid, etc. We don't see who is making poles, who is doing transmission, who is making wires, etc. So company is among the top global T&D structure manufacturers. It is also India's largest and the only integrated transmission and distribution company having its own structure, rolling, manufacturing, tower load testing stations, and transmission line EPC business. Its order book jumped by 2.7x in the last 2 years, led by large order received from BSNL. So they provide these towers for communication companies also. Order book to sales CAGR of 33%. Order books CAGR has been 33%, and sales CAGR is around 24% over last 4 years. And its present order book is roughly 5840 crore, which is 1.8 times FY24 sales. It is poised for a powerful performance driven by proposed NEP with indicative transmission capex of 9.2 lakh crore over FY22 to 32 over the 10 years up to 32, and a global wave of RE transition driving high voltage T&D capex. It stands to benefit immensely from domestic and export order intake tailwinds. It intends to double tower manufacturing capacity to 6 lakh million tons per annum from 3 lakh million tons per annum currently, at an outlay of 800 crore over the next 4 to 5 years. Exports account for 20% of its revenue and 15% of order book. Export contracts have a price variation clause which partially mitigate risk of fixed price minimal pass-through contract that Skipper has with Power Grid, PGCIL. Now, so if you see here, India had the last capex cycle of transmission and distribution was in around 2011 to 15-16, and now the next cycle has started, where the requirement will be very big, with thermal capacity, renewable capacity, and green hydrogen all included. Now, point is, all 70% of this, or most of the, most of the interstate transmission, 60 to 70% of the capex which will be done for interstate transmission will be done by Power Grid. And 70% of Skipper's transmission and distribution order book is from Power Grid only. So it will increase their total total order book. So if you see PGI's annual capex to grow 3x, so this is the growth which is expected from them. Now coming to NEP, this is the 5-year plan addition of transmission lines. So if you see in this 14th plan up to 27 and 15th plan, addition in circuit kilometers for all HVDC 765 kilowatt, 400 kilowatt, 230 to 20 kilowatt is there, higher than what has been there in the last plans. And the growth is basically in 765 kilowatt and something in 230 and 220 kilowatt. And addition of substations, again, maximum in 765 kilowatt. So you're adding both substations and transmission lines. Now, total addressable market for T&D towers. So this is simple calculation. So if you see for 220 kilowatt, 400 kilowatt, 760 kilowatt HVDC, this is a circuit kilometer going to be added. Towers per circuit kilometer are this much. So total towers needed are 5,42,000. Average tonnage per tower is 40. So total tonnage is 2,16,000. 2 crore 16 lakh 91,000 odd. Realization per ton in terms of millions is 0.1. So total NEP is 9.2 lakh crore. Tower is expected to be around 15%. So it is a project of roughly 1.4 lakh crore if you do from 15% of the total project, and if you do from this side, then this is 2.2 lakh crore. So suffice to say, transmission and distribution towers will only take in 1.4 to 2.2 lakh crore of expenditure over the next 7 to 8 years. So that is the revenue potential. Now breakdown of power TAM breakdown, total addressable market breakdown for T&D. Transmission towers will take, as we have taken from here, 1.4 lakh crore. Conductors 1.4, insulators 0.2, others 3.9, substations, etc., transformers, etc., 2.3. So all these, there is an opportunity with people supplying all these things. Now coming to Skipper, what is expected is that their orders will grow around 20% plus over the next 3 years. Order book growth will be also the same. Their revenues are expected to grow 25% plus every year from here. So PAT margins will remain around 10% plus. And EPS is expected to be around 16.9 in FY26 and 26 in FY27. And year-on-year growth is of EPS is expected to be in 40% plus. So you can easily see a CAGR of 40% plus in EPS. Now their product profile, they have a diversified product portfolio: engineering, power transmission towers, telecom towers, power distribution towers, monopoles, all these test stations, railway structures, infrastructure. They do EPC projects also, transmission EPS, telecom EPS, water EPS, railway electrification, and they provide these pipes in terms of polymers. So they provide these pipes also. Revenue mix is basically from engineering products, where they supply the poles. Polymer products is around 14%, and infra segment, where they do EPC projects, is 18%. Order book to expand 23%, as I've told you, CAGR over the next 3 years. So you can judge that. Now, who are the other players in the same field? See, in this T&D capabilities across listed space, the big guy is KEC International. Then there is Kalpataru Projects, Kippa, and Jyoti Structure. So KEC is also doing designing, manufacturing, testing transmission towers, laying transmission lines, substation construction, etc. They have 6 tower manufacturing facilities, some abroad also, while Kalpataru has 2 and Skipper has 4. Capacity is the most with KEC, and some with Kalpataru and Skipper, as I told you, but they are doing capex to double. 4 tower testing facilities, 3 in India, 1 in Brazil, 1 in Mexico, 1 in Dubai, 1 in Gujarat for Kalpataru, and 1 in West Bengal for Skipper. Up to 1200 kilovolt of tower testing capacity capability with all of them. So there are multiple projects, people who are doing these, but only very few can do these kind of niche work. Hence, all these orders will get distributed to every one of them. So if you see their base bull case, bear case, if they do around 50%, base case around 20%, and bull case 30% growth, still the price targets are roughly around 425, 650, and 740 for them, depending on their upside potential from here, and EPS growth. So base case, say roughly 26 EPS in FY27. So one can easily value them at 25 times to 650. If you see the peer valuation, Skipper expected is FY27 time, it is at 17 P, and EPS CAGR is roughly around 48%. KEC is also at the same PE, and though EPS is expected to grow slightly higher, ROE is also higher. Similarly, with Kalpataru Projects, Larsen & Toubro, and Techno Electric, even Tata Projects is also in the same field. Now, let's see their chart. Again, steady growth this year, and it is growing high. Now, there is a breakout here, probably because of some interest and research reports in this sector and all that. And after the NEP has come out, people have become excited about this. But every dip should be a buying opportunity. So there is a rapid growth in renewable energy sources, which require investment in grid expansion and modernization. Focus is on intrastate and interstate transmission networks. There is a big expansion in transmission network because you have to carry the network to places where the renewable energy is being produced, which is basically in Gujarat, Rajasthan, and Ladakh. So you require high voltage transmission corridor to be connected to those places and then carried to rest of the parts of the country. And if most of the projects are going to get to power grid only, so power grid will give projects to them only. So that's why they have a relatively secure revenue over the next few years. The other point is, moment you start doing this solar rooftop project, so that means there is and then what happens is those guys who are doing solar rooftops sell the power to the state. So you require a transmission network back also. So That is why it is requires some kind of upgradation of the transmission network, because it has to go back into the grid also, the power which is being produced. The next stock is transmission in the Transformers and Rectifiers India. It is undertaking an ambitious capacity expansion program which will not only make the company India's largest transformer manufacturer, but also one amongst the control of key inputs through backward integration. Order inflow for the quarter is around 1,000 crore. It has increased to 28% year on year, taking the order backlog to around 3,500 crore. Key products attained backward integration, including tanks, radiators, bushing, and core CRGO. CRGO is cold rolled grain oriented silicon steel for transformer cores. So what they are doing is they are doing backward integration to reduce their cost. It has signed a contract with an agent for acquisition of land for tanks, post which it will start in-house fabrication. It is in advanced stage of taking over one of the processing houses in Ahmedabad for CRGO, and collaborating with the manufacturer for bushings are in final stages. It recently raised 500 crore through QIP route, so probably they are planning to do some inorganic acquisition also. Management expects the Changodar facility expansion for IDT solar transformers to be complete by January 2025. IDT is inverter duty transformer, which is used for solar, wind, and renewable energy. Now, for them, there is a different kind of transformer required as compared to normal distribution transformers. Now, thing to know here is that the biggest player in IDT transformer is Voltamp transformers. So it is also, when I had covered it last year, that Voltamp was around at 3,000. Now that is also at 13,000. Received orders for 420 kilowatt three-phase reactor with synthetic organic ester insulating fluid from power grid, and order for 175 MVA EF transformer from ArcelorMittal, Mexico. MVA is megawatt ampere. That is the total deliverable power, and EF is electric arc furnace. So all these electric arc furnaces also require separate kind of transformers, so that they have received from ArcelorMittal, Mexico. Exports consist of 10% of order book currently. Target is to derive exports from special duty transformers, as it is only manufactured in India. Now coming to their this quarter's results, the revenue grew 75% this quarter. EBITDA was up to 233%. EBITDA margins have up 7 basis points. 7 basis points here. PBT was up 1342%, that is more than 1,000%, and net profit was up 1285%. So they are doing superb growth. So if you see here, FY24 revenue was around 1,294 crores. It is expected to be reaching 3,500 crores. That means it is becoming 3x. Expected to be 3x in FY26. Net profit is expected to become 6x, and EPS is also expected to become 6x. So there's a lot of growth which is expected. The growth indicator, if you see, roughly 60% growth in revenue over the next 2-3 years. Similarly, EBITDA growth pretty high, 100%, and EPS growth also. Valuation FY26, it is at 35 times. Still, it's not very expensive. ROE is improving. Asset turnover is very good. 6 or 7 times asset turnover is very efficient. And there is hardly any debt, so net debt to equity is very low. And margins are constantly improving, so they are going up. So we are becoming more efficient. So 75% year-on-year revenue growth. Gross margins improved 7.8 PPS. EBITDA registered 234 year-on-year growth. PAT jumped 1285% year-on-year. Order inflows were up to 28%, and order backlog grew 63% year-on-year. Now seeing their chart, so you see this stock used to be around 50 level in 2023, and now it is reaching 800 and is expected to go up also. People are giving it targets of 900 odd. So every dip here, if you see, we got a dip here. is a buying opportunity. Now it went up because the results were good. Now I'll cover just few stocks technically. First is Polycab. You see, it has had a breakout. I think they're likely to get some order in the similar field in transmission and distribution, because people required insulators, conductors, wires, etc. also for doing all this stuff. So it has made a nice rounding bottom and it is heading higher. So this is one stock which is in momentum. RSI is also strong. HL, if you see, is discussing this, it rose from around that 1600 or 1500 level, went right up to 5700. Then it has retraced. It has retraced around 38%, which is normal retracement. From there, it has slightly gone up. In my opinion, it can go up to this 23.6%, that is around 4,700 odd levels. And then we'll have to see on the subsequent news and what is the market mood and momentum from there, how it will play out. IEX, it was on a trending upwards, but then there was a major regulatory issue when there was something about decoupling came that it will be introduced and all that, and it had a sudden fall. So right now it is consolidating around 50 EMA. So there is nothing, no momentum here, and there is no, you see, there is no buying also. So there is no interest now in this stock. So it will just remain at this level or may correct from here, unless there is some incremental news now. NMDC, again, news-based stock. So, but the trend is lower, and it went up because of this China news and otherwise. But if the iron ore prices are falling because of lack of demand, etc., then there is no reason for it to go higher, and their output, etc., is nothing exciting. So I don't think this stock can go up. So, this will only go up on news, but then will correct back. I have finished. We'll take questions now.